Welcome back to Explain the Charts, where we break down complex market movements. Today, July 24th, 2025, we're putting Meta Platforms, symbol Meta, under the microscope for an in-depth analysis. The recent headlines present a compelling, yet complex, narrative for Meta stock. On the positive front, significant investments in AI infrastructure and product improvements are generating considerable hype, driving investor optimism. The company's Q1 2025 earnings report was a major catalyst, handily beating expectations with an EPS of $6.43 against a forecast of $5.24, and revenue of $42.31 billion, surpassing estimates. Furthermore, Meta's substantial stock buybacks, totaling $13.4 billion, demonstrate strong management confidence in its future trajectory. Indeed, several analysts are maintaining a highly bullish stance, with some even forecasting an astonishing $10 trillion market cap for Meta by 2030. However, it's not all sunshine and rainbows. Some analysts are sounding notes of caution regarding a predicted slowdown in ad revenue growth, which could impact future profitability. Concerns also linger about the increased spending on AI, wondering if revenue growth can truly keep pace with these massive investments. As of today, July 24th, 2025, Meta stock is up slightly, currently trading around $721, building on yesterday's close of $713.58. This mixed bag of fundamental news provides a crucial backdrop for our technical analysis. Let's now translate these events into actionable insights by examining Meta's price charts across different time frames. Starting with the one-day chart, we gain a comprehensive perspective on Meta's price trajectory since early 2024. The overriding trend has been remarkably bullish, with the stock consistently setting higher highs and higher lows for much of this period. However, no ascent is linear, and we witnessed a significant corrective phase in April 2025. Let's narrow our focus to this critical period, specifically from April to mid-May 2025, to clearly see this dynamic. This major pullback saw Meta shed considerable value, dropping from around $510 to a low of approximately $414. The sheer volume accompanying the sharp decline, especially the day of the $414 low, underscores the market's strong reaction to the earnings report and underlying concerns about profitability. This $410 to $415 zone immediately established itself as a robust long-term support level, forming a significant foundation from which the stock rebounded. The subsequent recovery, characterized by strong green candles and increasing volume, points to a powerful bullish reversal, aligning perfectly with the renewed AI hype we discussed. Looking at the broader chart, the $500 level, which was a significant resistance area in late 2024 and early 2025, transformed into a strong psychological and technical support after the rebound. More recently, after hitting its all-time high of $747.90 on June 30th, 2025, Meta has pulled back, finding crucial support around the $700 to $703 area, as evidenced by multiple tests in July. This $700 to $703 level now acts as immediate strong support, critical for maintaining the current upward momentum. The all-time high of $747.90 remains the definitive long-term resistance, a price point bulls will aim to conquer for further upside. A breakout above this level would signal a new leg up in the long-term uptrend. Moving to the one-hour chart provides a clearer picture of Meta's short-term price dynamics and recent trading ranges. Over the last several days in July, Meta has been consolidating below its all-time high, forming a recognizable channel. We can see repeated tests of the $710 to $714 zone as a reliable short-term support, with buyers stepping in at these levels. For instance, observe the candles from July 15th to July 16th, where price found solid footing multiple times around $710. On the upside, the $725 to $730 area has acted as a persistent short-term resistance, capping rallies within this narrower time frame. The mixed signals from the news, AI optimism versus ad revenue concerns, appear to be manifesting in this consolidation as the market digests the competing narratives. A bullish continuation would require a decisive break above the $730 resistance on strong volume, indicating that buying pressure is overcoming the sellers at that level. Conversely, a breakdown below the $710 support could see Meta quickly retest the next support zone around $695 to $700. Volume on rallies appears healthier than on dips in this time frame, which is a constructive sign for bulls. Traders should pay close attention to hourly candle closes relative to these levels, as they provide strong signals for short-term direction. Now, let's drill down to the 15-minute chart to analyze intraday movements and gain insights for precise entry and exit points. Focusing on the trading activity from July 21st through July 23rd, we observe a period of gradual ascent and intraday consolidations. On July 22nd, a notable surge in volume around 13:19 Universal Time coincided with a sharp drop from $717 to $702, suggesting profit-taking or a reaction to specific news. However, buyers quickly stepped in, pushing the price back up towards $705 to $706 within the hour. This rapid recovery highlights underlying demand for the stock, especially after short-term dips. For July 23rd, we see a more consistent bullish grind throughout the day, with the price steadily climbing from around $707 in early trading to close strong at $713.58. The current news, indicating Meta is up slightly today, July 24th, suggests this positive momentum has carried into the new trading session. Intraday traders should identify immediate support levels like $708 to $710, where price has found buyers, and resistance at recent highs like $716 to $718. Volume analysis on this timeframe is crucial. Sustained high volume on upward moves is a bullish sign, while high volume on drops near support could indicate a buying opportunity. Conversely, low-volume rallies or high-volume declines near resistance warrant caution. To summarize our comprehensive analysis of Meta platforms, Meta, on July 24, 2025, the overarching sentiment is cautiously bullish. The long-term trajectory from March 2024 remains firmly upward, despite the significant correction in April 2025, which saw price rebound from the crucial $410 to $415 support. Short to medium term, the $700 to $703 zone is the immediate critical support level that bulls need to defend. Should this level hold, the path of least resistance is upwards, targeting the next resistance zone around $725 to $730. The ultimate upside target in the short term is the all-time high of $747.90. A decisive breakout above $747.90 on strong volume would be a highly bullish signal, potentially opening the door for a move towards the psychological $750 and even higher levels, in line with some long-term analyst predictions. The likelihood of breaking $747.90 in the coming weeks is moderate to high, perhaps 60 to 70%, contingent on continued positive AI developments and sustained ad revenue performance. Conversely, a sustained break below the $700 psychological level would shift the short-term outlook to bearish, with the potential for a retest of $650 to $670. A zone that has previously served as both resistance and support. The probability of a significant drop to $700 or below is lower, around 30 to 40%, but could materialize if ad revenue growth disappoints or broader market sentiment sours. Key catalysts to watch include Meta's next earnings report, further details on AI spending, and any updates on ad market trends. For traders, consider long positions on bounces off established support levels, particularly if accompanied by increasing buying volume. Conversely, look for shorting opportunities or profit-taking near strong resistance levels, especially if price shows signs of rejection with increased selling volume. Always implement sound risk management, including stop-loss orders below key support levels, to protect capital. Remember, these are probabilities, not certainties, and market conditions can change rapidly.